Welcome everyone to another This Week in Crypto live stream. We're back after a week off here on May 17th, 2024. It's going to be me running the show solo today. Maxim should be joining us again next week. But in the meantime, we will have plenty to cover as we see a mostly celebratory week here in crypto with Test, test, test. Can you hear me? Okay. All right. I will start fresh. Thank you for those who pointed out that we were not coming in with our audio. So sorry for the 5 minutes of confusion there, but we are all set. Tech issues are a normal occurrence among live streams, as you know. So starting fresh, welcome everyone to a May 17th, 2024 edition of This Week in Crypto. I'll be running this solo. Maxim should be back with us next week. But in the meantime, lots to update here. There is certainly a positive trend that has developed once again after quite a bit of bearishness the last couple of weeks, and that's not a surprise. When traders tend to get bearish, that's when we see these bounces. When they get overly bullish, that's when we see these retraces. Markets always tend to go the direction of the crowd's least expectation. So here we are, Bitcoin back above 66, up to about 66.2K at the time of this recording. Ethereum also got back above that psychological resistance level of 3K, getting close to 3,100 at this time. Chainlink was a big winner, actually had a big plus 14% surge yesterday, which we reported on our X feed. And that was actually the entire difference in its week. It's up 14% over the last 7 days now. Pepe, huge week, up 16%. Floki, the biggest winner among the top 100 market cap assets, up 18%. So lots of positive stories, but actually quite a few negative stories mixed in. Render, which is one of the best performers of 2024, has retraced about 12% in the past week. Toncoin, also one of the best performers of 2024, down 5.5%, and Binance Coin also down 3%. You can see plenty of assets out there did actually retrace. In fact, when you go down the line beyond the top 100, you'll see a lot more negative return assets. So this isn't all celebratory for the altcoin market. A lot of it is Bitcoin itself having a big rebound, and then specific assets like Chainlink, as we see, and Solana, they're the ones that kind of saw some profit redistribution for a change, because it had been a lot of very speculative assets that were getting big booms over the past month whenever Bitcoin popped. But this time around, it's a lot more mixed. And of course, I would be remiss to not mention the fact that GameStop and AMC reemerged with our good friend Roaring Kitty back in the mix. If you aren't aware of him, he was the guru, if you will, behind the 2021 pump that kind of saw, the best way to describe it, I guess, would be the crowd's backlash to the hedge fund dominance in the equities markets, and he gathered the troops and was able to push up GameStop and AMC to new heights and wreck a lot of shorts. And that kind of happened again. It's certainly not on the level we saw in 2021 by percentage, but GameStop and AMC have had some serious noise, like it's 2021 all over again. So that had a trickle effect on crypto, because of course there is a lot of overlap with the same type of traders and the speculative nature of those pumps, and how, we see a lot of meme coins, especially like Pepe and Floki here, that had two of the best performing weeks out of any assets. So we'll see how long that lasts. He's back in the mix and talking a lot about, the diamond hands and things like that. And we're going to have to just see whether this continues to have an impact on crypto. Just remember that there were a lot of people who got wrecked the last time this speculative wave took over in 2021. Of course, that all-time high back then occurred in, I believe it was November 8th, if I'm not mistaken, and of 2021. And after that, there was just a huge retrace that impacted a lot of traders. So Um, I think a lot of people who got burned are like, I don't want to fall into that trap again, but I also don't want to miss out on this new pump wave that has been dormant for the last 3 years with a roaring kitty not available. So a little bit of a side story there, but of course, the main eyes are going to be on Bitcoin and the potential for it to now return back to 70K after about 5 weeks, 4 weeks of being significantly under that level, and it actually got to below 60K for a while. We asked, I won't show it on screen, but we asked X about 3 days ago, or 4 days ago, what the chances were of Bitcoin returning to either 65K or 55K next when the price was at about 61. And it was about 55% of people that said we're going to go back above 65K. I thought that was a pretty low number, especially with the bullish bias that you always see on social media. So it wasn't surprising to see this rebound happen. I wouldn't say it was necessarily due to sentiment, but that did have something to do with it. The crowd does have an impact, and when the majority feels that prices are going to go down, that escalates the likelihood of prices going up. That's how markets tend to work. Trying to think of anything else on the screener page. Overall, you can see market caps have gone up about 4%. That's largely going to be due to Bitcoin itself having such a large portion of the market cap. Volume is up a little over 12%. So we are seeing some heating up going on. I should also note that ETFs, I can show that, they had a huge week, or a huge day, I should say, just a couple days ago. $5.65 billion in volume. That was the highest day in almost 2 months. And I won't show the current 2 days or the most recent 2 days since this post came out, but this was a huge day that has kept its momentum up, and we're seeing some high volume right now. So we aren't in that stage anymore where everything on the whale side is coming from on-chain activity. They can also push up prices through ETFs now. So it's kind of a new world we're in. And this was right when we started to see a ton of positive momentum coming from Bitcoin and all of crypto. So keep in mind that we have this great ETF dashboard that's free to everyone, whether you even have an account or not. You can check in on it anytime. Now, I also wanted to mention the fact that Bitcoin whales are not making many transactions right now. In fact, this past week was the lowest level of whale transactions we saw since the last week of 2023. And there are actually 76 less Bitcoin wallets that hold 100 or more BTC. It's not a massive drop, as you can see. The perspective here shows we're still well above where we were in early February, for example. But with less of them, we rely on them to keep their overall supply high. And we can take a look now at the actual percent held, and it doesn't look too bad. Now, yes, they're trending down. You can see that since March 25th, when they were holding about 13.2 million BTC, they've dumped about 31.5K Bitcoin overall. But the trend continues to look positive overall, especially going back to about 3 months ago. So it's kind of a mini dump going on right now, and you can see how the price trajectory has somewhat followed that path. And you can see there was this minor rebound here that occurred a couple days ago, but we'd still like to see a little more accumulation to justify that we're heading back to 70K and beyond. I wouldn't call it, I'd call it mostly just a neutral divergence right now, though. Like, this is not nearly enough dumping for us to say, oh no, prices can't rebound and be justified to do so because whales are just dumping so much. They're not dumping a lot. This is mostly just disinterest right now and them sort of sitting and waiting for a big move in one direction, and then they're going to probably have some big moves up their sleeves. But right now, they're, as we saw with whale transactions, they're just being very dormant right now. And speaking of dormant, I wanted to look at mean dollar invested age, which I think is very relevant right now. If we go back a year, this yellow curve here is so important to price direction. It's a good validator. And when it moves down, this is a measurement of how many dormant tokens are moving out of older wallets and back into main circulation for traders to, move between them. And during this big bull cycle beginning in mid-October, you can see just how much the dormant movement was really taking off. And then right around early to mid-April, roughly 5 to 6 weeks ago, that's when it started to flatten out, and it's now starting to move positive. You can see this one little token age consumed spike right here, which indicates that a lot of dormant coins suddenly moved again. Little blip on the radar, but it's starting to move up again. And that's a tiny bit of a concern because the momentum of this mean dollar invested age line going down seems to be finally not look so bullish and starting to look a little bit like those dormant wallets are becoming dormant once again. So we'd love to see that change. It certainly doesn't mean that we're suddenly going to just rise back up with this line and all the coins on average are going to become old and dormant again. But right now the momentum has ceased, and we need to see that pick up again if we're going to, suddenly see a big all-time high coming up. Okay, so besides that, let's take a look at some other Bitcoin metrics here. Beginning with transaction volume and trading volume, you can see how much it's kind of dropped off. On-chain wise, there's not nearly as much going on as we were seeing around the all-time high a couple months ago. Volume wise, same thing. We are seeing the occasional spike here on these white bars, but the clear trend is that we're moving back down. Yes, we had a positive week, up 12% compared to the week prior, but not nearly enough to start seeing massive activity once again. Same goes for daily active addresses and circulation. In fact, this is a pretty serious dip. You can see that the amount of unique addresses interacting on the BTC network has dropped considerably since that early March level where it was exploding with excitement. If I put on, this 7-day average that's already activated, we were seeing around 950,000 addresses on average in the third week of March, and it's dropped down to about 700,000 now. That's a pretty sizable drop. You can see this average line here that I'm highlighting. This is the lowest we've seen address activity. Got to go back to 2022, I believe. Even beyond that, this is a pretty serious drop. 2020. Yeah, so the last time we saw address activity this low was way back in September of 2020. This was only 6 months after Black Thursday happened when COVID was taking over the world. So as far as unique addresses participating on the Bitcoin network right now, it's dried up considerably. And that's a concern for the long term. We need to see that utility is maintaining itself on the network and creating some positive momentum for prices to continue to rise over time. That is a major portion of what makes prices gain market cap is overall activity and utilization of that network. Circulation is also low, not quite as bad as address activity, but you can see the trend here. If I highlight this dark red line, it is moving down once again. So lots of concern there on the utility side and the overall usage of the top market cap asset in cryptocurrency. Going back to the last 3 months now, let's make this a bit more granular. All right, so MVRV, with this bounce over the past week, we've gone from negative returns of around negative 3.5% on average for 30-day traders. Now it's up to about plus 5.5%, which is the highest level about since we briefly saw this spike on April 8th. This is when it returned above 70K and people started to get optimistic. We'd see a new all-time high from the all-time high that had just happened 4 weeks prior. And then we saw this big drop off. So we're not in like any sort of danger zone with 30-day trader returns. But ideally, if you're trying to add on to your position or open a new position in Bitcoin, you want to be doing so when the lines are below the zero axis, not above. And you can see on the long-term trend here in teal, traders that have been active in the past 365 days, aka 1 year, they are up 32% on average. It's not as extreme as we saw back here when it was like above 60%, but average traders being up this high should be a cause for concern because of the fact that MVRV, no matter what time frame you're looking at, market value versus a realized value, I should say, the numbers, the higher they go above zero, the more of a danger it's signaling that Bitcoin could correct because it's a zero-sum game that regardless of what time frame you look at, it does retrace back to zero if enough time has passed. And now the last time we saw both lines below zero, which would be an ideal time to buy, you can see over the past year, the 365-day MVRV hasn't been below zero once. That's how significant the rally has been after the FTX collapse, basically. You can see way back here, this is when the FTX collapse occurred. And that's when the 30 and 365-day MVRVs were way in the negatives. You saw briefly here in March, there was a big dip, and then we really started to blast off. And the 365-day MVRV has been in the positives for about 14 months straight now. So I certainly wouldn't just wait on the sidelines in hopes that both will drop below zero and give a perfect buy signal. That often doesn't occur. In fact, it's pretty rare. But based on risk and probability, we're in a more testing time than usual. And there are some indications that we need to see a bit more of a retrace before that next all-time high hits. Certainly not a guarantee. Anything can happen. We can see just a giant group of whales decide it's time. MicroStrategy buys, another $30 million of Bitcoin or something. BlackRock gets involved. But as it stands right now, there's some concern when it comes to MVRV. Funding rate, nothing special going on. That's kind of a relief. If we were to see that people were getting very greedy right now, that would be a sign that a retrace is even more likely to occur. But for now, it looks like people are pretty indecisive and there's a lot of flatness. If I highlight Binance funding rate, let me take this so it's not so distracting. There we go. So you can see back here, tons of longs going on. These eventually got liquidated because everyone was opening up long positions after Bitcoin had already made these big surges, and then they got kind of smashed here. For now, it's just flat as people wait to see what big direction move happens next. If it starts to climb towards 68, 69K over the next week, don't be surprised if you start to see a lot of these long spikes opening back up, and those would open up the markets to have a correction and liquidate those big longs. I've already mentioned whale transactions really sinking fast. I'll get to the whale tiers in just a moment. We already kind of touched on the 10 to 10,000 range and how it's maintaining itself pretty well. This is actually interesting. So the on-chain transaction volume and profit to loss ratio, you can see how right after it had this big jump, there was this huge profit ratio, 5.5 to 1 in terms of transactions happening in profit versus at a loss. This was the highest spike we had seen since March 4th. And when that happened, there was a big correction right afterwards. So we didn't see a correction so much this time, but it did taper off right after that spike occurred. So that's pretty normal. You'd like to see these spikes stay pretty low. This is one of those metrics where high spikes are generally a bad thing because they're indicating that too much profiting is occurring on the network. Of course, we can see supply on exchanges has taken a dip once again. Don't pay too much attention to the actual numbers, but the direction is very relevant. We continue to add more and more addresses onto Santiment to make the number more and more accurate. But for now, just pay attention to the momentum. And it is moving down, indicating we're in a good spot where there isn't a huge risk of a sudden massive whale sell-off. And then social dominance, it's interesting. We had, go to the last month, zoom this in a bit. We had a few spikes related to Bitcoin social dominance, but it's actually really dropped off lately. And the crowd has quickly turned its attention to altcoins once again. Let's take a look at some of the trending coins now and see what's been going on the altcoin side and how the crowd is paying attention. So Toncoin, as we mentioned, it's dropping its price compared to the rest of the altcoins right now, which is not surprising because it had such a huge run already in 2024. And according to our trending token dashboard, it says the word ton is trending due to issues with sending and exchanging Toncoin from Telegram wallet to other exchanges, as well as confusion with transactions between different wallets. So there you go. That has a lot to do with why ton is likely dropping the way it is. People are not trusting the network the way they were back from January through April. And you can see there's a bearish summary, scam concerns, exchange problems, lack of communication, lots of concerns going on right now. And then on the bullish side, you can see there's still plenty of indication that the project's receiving positive attention, excitement about features such as Ton Empire, Ton Keeper, and Long Ton, strong sense of community among Ton supporters, and so on and so forth. So overall, the meter here is actually pointing to bearish, just like we can see with Notcoin. So it's pretty rare for the top two trending assets in crypto to be trending due to a bearish sentiment. And believe it or not, this is a great bullish sign if you're interested in investing in Ton or not. This, while the assets are, well, that's strange that it just opened that up. While the assets are dropping in market cap, it's a primary time to be able to buy in while the crowd is fearful and doubtful of the asset being able to rebound. So keep a look out on Ton and Not and see if there's some continuation of this bearish sentiment. I don't know why it's opening these up. I did not click anything there. I'll talk to the team about anything that might be happening there. But anyways, Ton and Not, bearish sentiment from the crowd means there's a better probability of a rebound, assuming their concerns about the network are not valid, because if that continues to happen, there could be some legitimate concern about the asset's viability. It's not my place to decide whether the network is stable or not, but please, formulate your own opinions on that. Ethereum, number 3, and it's trending due to speculations about the ETF being denied, causing market uncertainties. But of course, if there is any sort of acceptance of the Ethereum ETF applications, that could be a massive breakout for Ethereum, which would be huge for all ERC20s. You can see Chainlink below it, trending due to completing tests with major US banks for tokenization of funds. So if you're wondering why Chainlink had that big 14% surge yesterday, that news is right here. Solana, you can see a lot of big, large cap assets are in the trending list right now. And apparently Solana is having a network node problem. That's not new to Solana. They've had their share of network concerns. But that's interesting that that's coming up as the main AI summary, considering the crowd is mostly bullish toward it, and it's had a very positive week, getting back above $167. Holo/hot, very bullish from the crowd. Dogecoin also very bullish. Interesting that Doge is in such a massive bullish range right now. I would presume that this one has a lot to do with the GameStop and AMC crowd beginning to eye Doge, just as they did in 2021. For those who remember, Dogecoin was the big beneficiary on the crypto side as GameStop and AMC were making their runs, with Roaring Kitty kind of leading the charge there. So that would actually be a concern if you're eyeing Dogecoin yourself. Just be aware that the pump and dump crew that might be pushing up Dogecoin, which they've done so a little bit this past week, back up around 15 cents, they can rug pull at any time. And you just have to be aware of where you are in the cycle. And if you're coming in late to an established group that's already very bullish toward the asset, you're opening yourself up to a lot of risk there. Chiliz, this has been an on and off token over the past year that's jumped in and out of the trending tokens list. But yeah, right now it looks like it's trending due to events related to the Chiliz chain, updates in tokenomics. So this is all technology related. Loom Network, major run back up. It looks like it was above 10 cents, now just below it. And that is our trending tokens dashboard. Also, I urge you to check out the crypto narratives tab here. If we open this up, we can see several trends going on. The big one right now, you can see this large opening of Bitcoin talk. So it's starting to gain some steam once again. AI is starting to gain a lot of discussion again. It looks like ETF flows might be related to a combination of the Ethereum ETF as well as the overall amount of volume and new money coming back into the Bitcoin ETFs. Also, this one here, new listings. I'm not sure which. Well, if you look on the left side of my screen, it says the key topics currently discussed in the crypto industry on social media platforms include zero trading fees on GameStop, the launch of Drift token by the Drift Foundation, upcoming new listings on Bitmart for King, Genai, the Pasta Mouse Stuck, Am Console, GTAI, Brett, and Paired World, new listing of RTF on Bitcan Crypto Exchange. Lots of new listings. I'm not going to go through the rest of that, but if you've been watching the amount of new tokens coming out, keep in mind that the crowd is starting to gain some traction and awareness related to them. You can see Solana, GameFi. This purple one here is art, so perhaps related to the NFT space. Yeah, if you look at the left side, that's what it says. So keep an eye on what the crowd is kind of discussing at an increased or decreased pace here. I think it's a great way to visualize what's going on in the markets. If we head to historical trends, you can also see not a lot of talk related to bull market or bear market right now. Real world assets had been gaining some steam, but seems to be dropping off a little bit once again. inflation talks. You can see the latest one happened about 3 days ago when Powell made his last speech. And if we look at the watch list here, so we can see liquid staking had a huge week. Let me see. This doesn't look right. I'm going to refresh really quick. There we go. All right, this looks a lot better. So meme coins, they were the big story over the past week, up 11% over the past week. Layer 2's up about 5%, NFT's up 4%. And then there were a lot of drops. These were anomalies because there was some data lapses about a week ago. But you can see that there were plenty that did not do nearly as well, but meme coins and layer 2s, liquid staking derivative assets, these were the ones that kind of led the charge over the past week. So keep an eye on those sectors in particular for some opportunities that might be arising. I also wanted to show the weighted sentiment comparison, which is quite interesting because you can see right over here, this big spike, that's Bitcoin. All of a sudden, the crowd is extremely positive toward Bitcoin once again. And obviously that's related a lot to the rebound back above 66K. And I believe that this is a very big concern. You don't want to see the crowd shift from, this bearish sentiment here that it had for the last 3 weeks or so, and then suddenly be bullish once again just because prices surged. That's exactly the kind of indecisive, what have you done for me lately type of sentiment that can get traders in trouble. It is interesting that only Bitcoin has this sentiment. Like Ethereum, for example, they've had a pretty nice week and people are still not really talking about it too much. Even with the ETF back and forth, perhaps it's related to people being jaded that the Ethereum ETF is reportedly unlikely to be approved by the SEC. But regardless, this Bitcoin ETF or Bitcoin sentiment spike getting back into bullishness for the crowd, we'd much prefer to see that they stay bearish right now. So I'd pay attention to how the week progresses and just highlight weighted sentiment on the charts tab for Sandbase, and you'll probably find some good signals there. All right. Trying to think of anything else I can update. Oh, the whale tiers. Let's take a quick look at this one more time. So we talked about how there's a little bit of dropping off in terms of whale holdings, but it's pretty minor. I also wanted to point out USD coin, lots of shark and whale accumulation right now. They were holding back on March 24th about 30% of the supply. Now they're up to 32.5%. That's a pretty big jump. And it indicates that some fiat is certainly moving back into crypto with the possible preparation of some buys happening. It's not just how much Bitcoin the sharks and whales are holding at any given time. It's also how much dry powder they have. And at least for USD coin, they're starting to get some of that dry powder back in their back pockets, if you will, for a time that they might apply later to a big buy. Tether, on the other hand, staying quite low. So it's a bit of a mixed bag on the stablecoin end. They were holding back on November 24th about 37.2% of the supply. Now they hold 6.5% less of the supply, down at 30.7%. So that story for the dry powder is not looking so good for the top stablecoin. But USD coin, the second largest stablecoin, we're at least seeing some signs of rebounding. Overall, I'm still pretty neutral on the shark and whale behavior, perhaps just slightly bearish for the short term, but long term, you can still see that Bitcoin's accumulation trend here in shark and whale wallets is looking pretty good. We mentioned weighted sentiment, funding rate, total amount of holders. I think there's something fascinating going on here. It's kind of flattened out. I actually put out an insight. If I can find it. Maybe it was at the top. Where did I put it? I don't know where I put it. Interesting. Well, I'll manually explain exactly what we found here. So if we look at the total amount of holders, which is essentially the amount of wallets that have any number more than 0 Bitcoin in their wallets. So not just the overall amount of existing wallets, but wallets that have at least a tiny semblance of a coin in it or a portion of a coin. You can see they've actually dropped off over the past week. On May 10th, or technically the 9th, because we only have data through the 16th until the day is over, there are 86,630 less Bitcoin wallets that have more than 0 coins in them. So that's actually a bit of a sign of capitulation, and probably had something to do with this rise because they're kind of seeping toward larger wallets whenever these small ones are liquidating themselves. So look for that trend to continue. As we saw here from January 20th through, let's say, February 20th, that 2-month stretch, there was 748,000 Bitcoin wallets that were liquidated. And that was happening as the rise was happening. So a ton of people were taking profit way too early right here. And eventually they started to get FOMO right before the all-time high. You can see it climb. And then right after, it plateaued as everyone was unsure what would happen with the price. But generally, when you see less of these wallets existing over time, it's a good sign that we are going to be potentially able to rise without much FOMO happening. And then the percentage of total supply and profit, you can see we're back up at about 93%. This was a nice bullish sign when we got to below 85% for the first time in a long time. And then the total supply and profit is back up to 18.31 million Bitcoin overall. So most Bitcoin since their existence are in profit, which should not be a surprise to anyone considering we're still, within reach of the all-time high that occurred a little over 2 months ago. All right, last thing I wanted to share, and then we can check out a couple questions if there are some. RSIs are back mostly in the positives. This is actually not ideal. We want to see them lower like they were about a week ago when most were below 50. So if I mark 50 on this chart, it's going to be right there. Most coins are well above that line now, in the mid 50s up to the high 60s. In particular, Bitcoin, which has been one of the better performers, its RSI is at 64 again. This is on a 0 to 100 scale where you want it to be lower, indicating there's been a lot of pain in the markets. And then way up high still is Toncoin, even though it's taken a dip over the past week. So RSI is indicating that we are starting to get a bit on the overheated side when it comes to the momentum. This is an oscillator momentum metric that a lot of TA traders use. And there's a bit of a danger zone being indicated here. For what it's worth, XRP is the only one among these notable top caps that is below 50 right now. All right. That said, Baresh, if you see any questions that I can quickly address, I'd be more than happy to. Let me know what you see. Okay. Check out Reds. All right, so Res is not an ERC20. We do still have a few things we can look at here. It's only been in existence. This is a very new asset, unless we just got data for it late. But my understanding is this asset's only been trading for about 2 to 3 weeks. Overall trading volume is quite low. You can zoom in a little bit on the price here. Got it, ETHFI for the next one. So volume is very low, not much happening there. It's been declining since it started publicly trading a couple of weeks ago. Its market cap rank is 379. So I'm assuming that means that it started trading quite high. It was at 25 cents in late April, and now it's down to 11 cents. So it's actually taken quite a beating. I'm assuming the person asking about this asset might be interested in buying the dip here. So the other thing we can look at is social volume and dominance. Yeah, there were some occasional spikes here. You can see that it really has not made a big difference on its price. I think this asset's just a bit too new for us to do analysis on. I wish I could say more, but especially with it not being an ERC20, we don't have a ton of on-chain stuff. And then as far as social volume, there just hasn't been enough of a sample size yet for the crowd to really establish when bottoms and tops might be happening. But it does look like it's still being talked about. I would presume for negative reasons. Trying to think if we can look on social trends here really quick. Yeah, I mean, we did see this big spike in Res talk right on May 1st, and this established a bottom. Oh, I'm sorry. My mistake. That was not Bitcoin. That was Bitcoin's price. So yeah, it kind of became part of the public consciousness on May 1st in particular. Had one little rally a couple days after, and then it's just been down, down, down ever since. So if there is any social volume, it doesn't seem to circulate around one platform in particular. A little bit of talk on X, but it really has not gotten any signs of discussion this past week on anything other than X, maybe one blip on Reddit and a couple blips on Telegram. So too new. We'll have to check back in maybe in a couple weeks when it started to get a bit more established, but it certainly dropped significantly over the past couple weeks. And you know, there could be an idea of buying the dip here. I would just need more information. All right, ETHFI. So ETHFI, we do have on-chain data. It has data since around mid-March, so we've got a couple months we can work with here. As far as transaction volume goes, it's very low, not much activity at all. Volume actually is showing some signs of picking up over the past week. Overall, its price since late March has gone down about 56%. So this is another potential buy the dip candidate. Daily active addresses, just right after it became public, it's dropped off considerably. It had 65,000 active addresses that day on March 17th, and now it's down to 336 or so. So it's just seeing a fractional amount of activity compared to a couple of months ago. Not necessarily the worst thing, though. It could just be overlooked. We'll look at some others. Whale transactions, same thing. I mean, massive amounts, and it's just dropped off considerably ever since. But here's where we might find something of interest. The price is just above $3 right now, so I would say that sharks and whales are going to start around here. These are our key sharks and whales. Yeah, Yeah, it does look like there are more and more 10K to 100K addresses being created. We're up to about 6,800 of those addresses after it was, yeah, I mean, ever since it began, let's say on March 17th, gone up about 17% in addresses. So there is a climb when it comes to shark addresses, and these are $30,000 to $300,000 valued wallets. They're not nothing. Now, looking at the percent held, it's going in a similar trajectory here for 10K to 100K. Not much from the higher tiers, though. So if we were to just take, let's say, any wallets that hold at least 10,000 in them, I'll control click that. Yeah, so they hold the vast majority of these coins by far, not that unusual for a brand new asset. And they are slowly declining right now. Let's go to just the last month so we can see it a little better. Yeah, so they are dropping off, but I do like that since the 12th, it's kind of maintained itself and actually climbed slightly. If we look at the micro addresses, so we don't want to see a lot of FOMO. I mean, it looks okay. There's a little bit of a climb from like the 1K to 10Ks. These are the dolphin addresses. But overall, we're going to need to see more time elapse. I don't think that this is anything unusual for a new asset where all of the coins are kind of held by the, the very large founder addresses and then slowly trickling into the smaller ones. Ratio of daily on-chain transaction volume and profit to loss. Yeah, a little bit of a spike here. Might be a concern. We want to see that there's mostly losses coming in if you're looking to buy right now. But the last big one that was kind of a sell signal was on May 5th. Mean dollar invested age, not much dormant coin activity, but it's too new of a coin for this to be too relevant right now. Supply and exchanges kind of staying flat at the moment. Social volume and dominance, it's not really being discussed at any crazy level. Weighted sentiment, because it's not being discussed much, I think this is a bit too new and misleading to really apply yet. Development activity does matter, especially with new assets. We'd like to see that there's an established team behind the asset, and there isn't nothing on ETHFI's development team, but it is very low. So we'll see if this picks up over time. Most big assets that have major climbs over time, they tend to see growing development activity over time. So I'd watch this one carefully to see if there is an active team that starts to pick up steam and show signs that they're trying to innovate and improve the project. RSI is well below 50 right now. So, you know, when we compared it to XRP and some of the top caps, ETHFI would actually be very low, which is a good thing. It means that there's a better than average chance that there could be some positive price movement in the near future, at least until it gets above 50. And then the total amount of holders, it looks like there's chunks of time where they jump all of a sudden and then they slowly fade. Right now, ETHFI has been ignored for about 4 days in a row. But, you know, there are 69,019 total ETHFI addresses with coins in them. That's a lot more than we saw back on May 2nd when there was a little under 58,000. Since that time, there's been a jump of about 11,000 addresses, which is a 19% increase. So not too bad for a 2-week stretch. So overall, I don't think ETHFI looks too bad. It's pretty typical for a new asset. Interesting that both of our asset requests today were related to coins that have not been around very long at all. So they're tough to analyze, but I think, you know, we were at least able to extract a little bit of information about them. I think that's going to conclude today's call. I want to thank everyone, as always, for jumping on to our live stream and joining the chat. For those of you watching on replay, queue up some questions for next week and let us know what you're looking at what you foresee happening in the market as we get into the summer months coming up here rapidly. And we'll see how long this roaring kitty cycle happens this time around. You know, whether you think it's kind of a joke and it makes your eyes roll, or whether you're very much engaged with it. You know, it is a very real aspect of crypto right now, just as it was in 2021. And it can have a tremendous impact on how markets fluctuate. So keep in mind what's going on with the meme coins, as well as, you know, the equities markets with AMC and GameStop. They're going to be relevant to how much momentum the speculative trading crowd has in crypto. And if they're earning a lot of money due to more pumps in those equities, those profits can trickle into crypto and go into Bitcoin or go into meme coins, and we'll see another rally from them. So I'm excited to see how this final 2-week stretch of May goes. And I wish you all a very happy and safe weekend in the meantime. We'll have Balance back with us next week, hopefully. And I want to thank Balresh for running a great stream and rolling with the punches of the audio issues. So thank you, everyone. Talk to you soon, and take care.